Hi, I'm Callum Newman. I'm the editor of the Daily Reckoning Australia, and today I'm joined by my US colleague and co-editor of the Daily Reckoning, Jim Rickards, and we're going to be talking about Bitcoin and blockchain. Reason being is one of the biggest issues or comments we get from readers at the Daily Reckoning is why we don't always agree with each other. There's no party line. Every editor that writes for us is free to talk about whatever they want. As an example of that, I've been very positive about Bitcoin this year. Jim's a little bit more negative, you might say, and we're going to explore some of those issues. Jim, you've talked in the past in the DR how you're very positive about blockchain, less so about Bitcoin, but what's the difference between the two?
Well, let me talk about that, Callum, but before I do, I'd like to address your first point, which is, the reader comment. Boy, you've got a lot of editors and publications, and they take different views. What's the party line? And of course, the answer is the party line is we respect the reader. We don't have a party line. We put out the best information we can with the best editors we can. We respect the reader's ability to do what's best for them. But this idea that you're getting different points of view, there's a lot of benefit in it. And there's a technical name for it called cognitive diversity. It just means different points of view. And I've seen the other side of that. I've seen the dangers of a party line. Going back to the late 1990s, one of the great financial meltdowns of all time that almost shut down the entire global financial system, every stock and bond market in the world. We were just hours away from that complete collapse. Was a hedge fund called Long-Term Capital Management, or LTCM. I happened to be the general counsel, the lawyer of LTCM, and when that hit, I had to negotiate that bailout, get the money in, $4 billion all cash from a consortium of Wall Street banks, prop up the balance sheet so we could move on and gradually unwind it. But what was the failure there? These were, we were famous for our PhDs. We had 2 Nobel Prize winners. We had the leaders of modern financial theory. We were a money machine. We had more than tripled investors' money in 4 years, et cetera. So how did it all melt down? How did it fail? Well, one of the biggest failings was the fact that there was a party line. There was a lack of cognitive diversity. Now, imagine this, we had 16 PhDs, average IQ probably north of 160. This is more brain power than you can even imagine. We had complaints from deans of business schools from Harvard and Yale and elsewhere. They said, you guys are depriving the world of a future generation of finance scholars because you're hiring all the great PhDs. We would call them and call professors and say, who's your smartest student this year? They're talking in the world. And then we would hire that person to join us. But here's the problem. Everybody thought alike. They had the same professors, the same finance programs, the same 4 or 5 schools, Harvard, Yale, MIT, Chicago, et cetera. In many cases, they taught each other. You'd have Bob Merton, one of our Nobel Prize winners, who taught Larry Hillenbrand, and then Larry would come along and teach someone else. So, with hindsight, I was able to make the point, we would have been better off if we had fired a couple of the partners, hired the landscaper and the receptionist to join the risk management committee. We might have lowered the average IQ, but we would have expanded the cognitive diversity. It's exactly those different points of view that give you your strength. So that's one of the things that Gore Financial readers hear. People should prize the fact and welcome the fact that we have different points of view because that's helping them, and that's actually a source of strength. But on your specific question about Bitcoin, one of the main bits of confusion is, no pun intended, but is Bitcoin or any cryptocurrency versus the blockchain. Now, by the way, blockchain, that phrase is popular. People are kind of getting onto it, but it's almost obsolete. The new phrase is distributed ledger technology, DLT. DLT is just the blockchain, but there are going to be improvements and upgrades to the original blockchain mathematics and algorithm. Blockchain, as it exists today, very innovative, but has its problems, and little by little, IBM's Hyperledger project and other, which is an open source developer project, are working on those. But distributed ledger technology, blockchain, whatever you want to call it, is here to stay. It's just cheaper, better, faster. It's a way of recording ownership. It's encrypted, 256-bit military-grade encryption. You can't kind of destroy it because this is where the distributed comes in. It's recorded on thousands or hundreds of thousands or millions, if you like, of servers and computers all over the world. So even if you start shutting down or blowing up or impounding part of the network, it doesn't matter because it still exists on the rest of the network. And you can check the work. That's what the miners do. They solve difficult math problems to verify the ownership in exchange for which they get now a Bitcoin or some other cryptocurrency themselves. And that's the ecosystem. Look, this can disintermediate banks, stock exchanges, clearinghouses, et cetera, and do things much more cheaply. And it's being adopted by government agencies, multinational institutions. The IMF has a blockchain or a DLT project. Russia's working on it. The founder of Ethereum was meeting with Vladimir Putin in Moscow recently. China's working on it and others. So you're going to see a lot of that. Bitcoin itself is just one cryptocurrency on one version of blockchain, and it's wildly popular. I know it's gone from $200 to $1,000 to $5,000 to $7,000. Fine, it just looks like a bubble to me. I compare it to the tulip mania in 17th century Netherlands. I said the difference is, at least with tulip mania, you got to keep the tulip.
Absolutely. That's already said that.
Yeah, here it's not clear what you get, but the point is, I don't recommend. I don't own any. I don't recommend it. I do think it's a bubble. I do think it's going to collapse and leave a lot of people very, very badly hurt. Having said that, people take a different view. If somebody wants to take a punt on Bitcoin and hope it goes up, that's fine. But I do think this distinction between the technology, which is here to stay, and the particular currency, which in my view is probably a dead end, but there'll be other currencies, other tokens or coins or whatever you want to call them, other ways of keeping score, keeping count on the distributed ledger technology that will be a big part of the future. So for investors, in my view, the way to play it is not with Bitcoin, but with the companies that stand to benefit from this. Either companies that are doing the technology, like such that are actually developing this and improving it, expanding it, et cetera, or companies that can utilize it and make their systems better, faster, cheaper. So there are absolutely ways to play it. There are ways to profit from it. But if someone wants to take a punt on Bitcoin, that's fine with me.
Yeah, you're right, Jim. And I always say with people with crypto, you've got to be following this market because it has the potential to disrupt existing businesses, which might be shares that are already traded. The interesting thing for me with cryptocurrencies, we've had this sort of private ones come to the fore at the moment, but the central banks around the world, like the People's Bank of China, are looking at cryptocurrencies. The Bank of England's another one, to introduce their own version. How long, in your view, before that becomes public, and which one goes first?
Well, I think it will be not be long at all. First of all, the institutions you mentioned and others, the International Monetary Fund, Central Bank of Russia, People's Bank of China, and others are already working on it. So there have been announcements to that effect. So that's out there. But there's something deeper going on, which is what can distributed ledger technology or blockchain be used for? It can be used for a secure, inexpensive, fast payment system. Well, what's the dominant payment system today? It's the U.S. dollar payment system. There's one system called FedWire, which is how U.S. dollar transfers are made between banks who are members of the FedWire. And even if you're not, you may be an Australian bank that has a U.S. dollar account with a U.S. bank. Maybe the Australian bank's not a member of FedWire, but the U.S. bank is, and so you're a correspondent bank. So through that bank, but you can access FedWire, but all these dollar transactions go through FedWire. Then there's SWIFT, which is based in Brussels, which is an international version of the same thing. It's a kind of a payments transfer system. It's funny. SWIFT says they're adamant. We're not a financial institution. We're a telecommunications company. That's the T in SWIFT. But the point being, it's a way for banks to move value back and forth between each other on irreversible, irrevocable terms using certain MT or message traffic systems and codes that they have. So they're the two, and use that for dollars, but you can also use it for major currencies: euros, yen, Swiss francs, and again, this is global participation. So they're the two big payment systems today. They're both controlled directly or indirectly by the United States. The U.S. has 100% control over FedWire, and with our allies, we have some control over SWIFT, and we've used it to penalize countries. We kicked Iran off of SWIFT during a financial war between the U.S. and Iran in 2011, 2012. Obviously, people like North Korea can't even show their faces. They're kicked off of SWIFT. We have a name for it in financial warfare when we deal with the Pentagon and the Treasury in this. We call it de-swifting. The U.S. will de-swift you. It's like cutting off oxygen supply to a patient in intensive care. They're not going to last too long. Well, if you're an adversary of the United States, you're Russia, you're China, or one of these other countries, you're very vulnerable to that. So what could be better for them than to create their own payment system? So now look at all the pieces of the puzzle. They're acquiring gold. Russia and China have tripled their gold reserves in the last 10 years. They're working on distributed ledger technology or blockchain of their own. They could soon work out their own tokens or coins, called a Putin coin or a Xi Jinping coin, the Xi coin and the Putin coin, etc. But on a serious note, they could, all of a sudden, you're trading oil, natural gas, construction projects, manufactured goods, enriched uranium, etc. You've got this whole ecosystem of trade and commerce where the payment system is not controlled by the United States, does not use the US dollar as encrypted and secured. That's a big deal. It starts to run the dollar off the road. So this technology is coming. They're already working on it. You're going to see it a lot more. It has huge implications not only financially, but also geopolitically. And there are ways for Australian investors to participate in it.
Yeah, absolutely. So we'll wrap it up there. Thank you, Jim. That's a little taste of what you can expect from the Daily Reckoning Australia. Jim, pleasure.
Great to be here, Cal.